I've got 8 fresh trade setups to break down across Forex, stocks, and crypto, and while preparing for this video, I actually stumbled across a market concept that I've never heard about before. So we wrapped up the week with a semi-huge move on the Japanese yen, and the question everyone was asking is, was this intervention? And the answer is not exactly. See, the rally wasn't driven by the type of direct intervention that traders were expecting. Instead, Japan announced that it was considering a significant amount of their capital back into domestic investments, which is a much more aggressive and kind of indirect way of supporting its currency. Now, heading over to the dollar yen, we have another buying opportunity here. And last week we spoke about this type of pattern or candlestick cluster down here, and really the clues that these candlesticks were giving us, specifically the long wicks to the downside, showing us signs of bullish rejection. And lo and behold, we got a bullish move back up just as projected. Well, we have something very similar to end the week. If you look at our past, 1, 2, 3, 4 candles, there's a very similar theme here where we have long wicks to the downside, just like before. So again, I would expect another potential move to the upside. The question we want to ask is, if price action is likely to move to the upside, then where are we likely to go to as well? And just to take a peek right here, yes, we do have some divergence on the RSI. You can see price action putting in equal lows. You can see our RSI putting in higher lows right here, which is another sign of a potential bullish move to come. Now, as we go down to the hourly chart, here is what I would recommend. Instead of hopping in this trade right now, because I don't think this is the right time to do it, I would want to wait for more confirmation. And the confirmation that I would look for is a break and close above this previous level of structure right here, pretty much the high peak part of our double bottom pattern. Now, I got a question from a trader about this multiple times this week. What is a higher high, higher close? A higher high, higher close would mean that a candle would need to not only break above the high of this candle, but also close above the high as well. So if we got a green candle that looked like this, that would be a higher high, higher close candle. If that were to happen, my projection is that price would likely travel right back up here to about 162.40s, making a pretty decent trading opportunity for the week to come. Another yen pair that we showed you in last week's video and have been watching all week, and hopefully you guys saw the 2 videos I put out on it, has been the pound yen. And we're really coming into the second phase here in the higher time frame. We did break and close above, and you can see that we ended the week, specifically Friday, with a big bearish candle. Again, yen strength from what I mentioned earlier. Well, this bearish candle is going to act as a deep retracement here on the 4-hour. And if you're looking for another chance to get involved in this trade to the upside, right? Remember, our bigger projection is that 219 even handle. This is going to be the area that you need to watch. As always, you don't want to enter right now unless you're just super aggressive. You want to wait for your reason for entry. So for price action to give you a clue that what you predict is more likely to happen than not. But this is going to be an awesome place to get involved in. On the other hand, if we do end up violating these lows right here, that is when that bullish projection would be over, and then you would shift your projection back down to the downside. So for any of you guys that missed the initial 100+ pip move on this pair, you may have a secondary opportunity. Now, before hopping into our dollar pairs, let me give you a little bit of a recap of what happened this week, because it was a pretty interesting week as far as movement goes. You see, we had 2 major news events that were really driving price action. First was the FOMC meeting minutes that showed policymakers pretty much had a even split down the middle as far as the future path of monetary policy goes. Looking ahead to this week, we have both CPI and PPI on the calendar for this week. These are 2 of the biggest inflation reports of the month, so don't be surprised if they create some serious volatility across the dollar pairs. Now, taking a peek at the euro dollar, we're still looking for longer term shorts, right? For you guys that follow this video each and every week, you'll remember about 3 weeks ago, we were looking at this retracement right here after a violation of our lows. And our bigger idea was that we should see some type of continuation lower here on the euro dollar down to about 113, down to about 112. And well, this is still in play. And you can see that it's formed a nice bearish flag pattern as well. More specifically, what I'm paying attention to here was this candle right here. Not only was this a strong bearish candle with a very nice sign of rejection to the upside, but that rejection came right at our previous level of rejection, looking left right here, showing that the bulls once again tried to press through that level, and the bulls once again got rejected, and the bears have regained control. You can see actually a lower low, lower close on the day as well. So if we hop down to the 4-hour chart, you'll see that we do have some room to the downside. You can look at this as the bigger play where we can again look for that continuation, that break of that flag pattern and move all the way down to 113s, 112s, or at least a conservative entry or a conservative target, excuse me, down here at about 113.30s. Or on a shorter term perspective, the first spot that we should attack should be right here around this, what is this? This 114 even handle. So positive signs for a bearish euro dollar, both in the short term and the long term. Another good example of a daily hold is going to come here on the pound dollar. You can see price action came right up to our elephant zone right here. That's what we call the zone before this big red candle that sticks out like an elephant. Once again, we have that nice rejection up here. Bulls tried to push up, bears beat them down, and we have a very strong bearish candle right there. Where would I expect us to continue to next if we fall lower? Well, it's going to be our very next rejection zone down here. The zone starting at about 133.60 and ending at about 133.25. So a little short-term move here on the pound dollar would be looking for shorts from around this 134 even handle down to about that 133.60, 133.50 level. Now, something to be aware of on the pound dollar that's a little bit different than the euro dollar is the bigger picture. On the euro dollar, we did have that bigger bearish trend. On the pound dollar, we do not, because we never broke and closed below structure. So what we're actually doing here is putting in somewhat of a head and shoulders pattern. If we take a look at our movement here, we have a move down here, we have a move back up, we have a head down here, we have a move back up here. And I know many of you guys are wondering, hey, you know, what if this does become a head and shoulders pattern and we push up right here? Well, that wouldn't really affect your trade. And that's one of the reasons that we're shooting for such conservative targets. If this does end up being a head and shoulders pattern, well, I would expect this to be the area that that right shoulder forms to. So by coming down to that area, you would get your targets hit, you would get out of the trade. And if the market decides to kind of push back up and break the neckline, it won't affect you at all. So there's no need to be fearful of that pattern that doesn't exist that you may think could exist. Real quick, if you like the analysis and you want to see follow-ups throughout the week, make sure you join our live trading room. It is available with your 14-day risk-free trial membership. Just head over to www.tier1trading.com. Check out London, check out New York, live order recordings, and stay up to date with what we're looking at on a daily basis. All right, let's hop back in. Euro Aussie is next. And we saw some Aussie strength to end the week, partially because of the New Zealand rate stuff during the week and then some China stuff as well. But from a technical perspective, this is a really important candle. We came off 2 days of consolidation, a bigger doji right here, a smaller inside doji right there. And then we ended that with a break and close out of that inside bar zone and below this previous level of structure right here. My full expectation is that at minimum, we come down to retest our next level of structure there. As we go down to the 4-hour, we're going to get a much clearer picture of the break and close. And with me being a pullback trader, the perfect opportunity that I see on my radar is to look for a little bit of relief and then catching that next extension to the downside. Another positive sign here is going to come on our ADX. This has been an indicator we've been talking a lot about in the live room. One of our live room members is building a strategy using this, so we've been kind of keeping track on this. But if you take a look at two things on this indicator, I'll try to keep this as simple as possible. One thing is going to be the red and the green line. The red and the green line is going to notate a bullish versus a bearish trend. So when the red is above the green, we're looking at bearish momentum. When the green is above the red, we're looking at bullish momentum. So we can see that the red has clearly crossed above the green, which means bearish momentum, confirming our signal. This blue line in the middle, this is going to be our strength of momentum. And there's different ways to measure this, but a common way is to draw a line here either on the 25 or the 20. And a good rule of thumb is if this blue line is above the 20 or 25, then we have strength in trend. If it is below, then we have weakness in trends, so consolidation. And as you can see, as we start to build momentum here, we're seeing that reflect on our ADX as well, with us hooking back up and hooking back up both above that 20 and that 25 line. Now, again, for me, indicators are always secondary. Price will affect the indicator, not the other way around. But for you guys that are looking for confirmation, I do think indicators are good for having confirmation. It's good to see that what we see on the chart is being confirmed by the indicator at the bottom. Aussie Swiss is another pair I'm interested in. Again, we saw Aussie strength to end the week. And before we hop into this, I want to remind you of the lesson that we brought you midweek with the pound yen. Remember, I told you that one of the biggest mistakes that traders make is they feel late and they buy at the top. And then when they buy, the market goes down and they get mad and sell. Then the market goes up again and they feel like they missed out and they buy at the top again. The market sells, right? This is a perfect example of that. Price action has exploded out of this range, right? We had this kind of goofy looking head and shoulders consolidative pattern here, and we have exploded out of it to the upside. And many traders are going to feel late. They're going to see the move go from 55.90s all the way up to like 56.20s and be like, I missed out, I missed out, I missed out. But you can see that we have a nice clue to end the week, and that's going to be this pin bar right here. Just like in previous pairs, that long tail to the upside means rejection, meaning that the bulls started running out of steam, the selling pressure started to take over, and it's a good sign of potential relief. So this would be a very bad place to buy, in my opinion, and what you should do instead, in my professional opinion, of course, is wait for that relief, pull back into our previous level of structure, and then look to catch that next wave up. And if price is going to go up, we've got a pretty far way to go. You can look left. There's no real dangerous levels of structure in this area until we get to the highs up here. We can bring some volume in and see if that gives us any clues about places we need to pay attention to. And you can see the point of change is right here in the middle. There's no real volume here. And again, for me, volume is synonymous with interest. So the levels that spike out more are the levels that the market is more interested in. We can have a pretty good run at these highs up to about 56.60. So definitely a good pair to keep on the radar. But again, I would recommend waiting for that pullback into this high volume level and then looking to catch that extension up at a much cheaper price. Speaking of waiting for relief, the DAX is a perfect example of that. Again, last week we spoke about a butterfly pattern being a relief pattern. And what did the market do? Well, it gave us exactly what we thought it would do. It gave us relief back down into our previous level of structure. And then again, you can see the candlestick clues that the market is leaving us. Long wicks to the downside, bullish rejection, bullish rejection, bullish rejection. This is a perfect place to look to load up your longs for that next potential move higher. And as we go down to a lower time frame, the 4-hour, we have a nice opportunity on here. We actually had one during the week as well. Let me go down to the hourly and show you what we were looking for. We had what's called a 2618 opportunity, and this is what the 2618 is. The 2 stands for a double bottom, which is what we had right here. And then the 2618 is looking for a violation of our double bottom, which is what we had right here. And then a return to our 618 Fibonacci retracement, boom, and then looking for a move up, which we got. But then we kind of just stalled and didn't go any higher. So if you're looking for a secondary opportunity at this trade, I wouldn't enter right now, right? We're in the middle of consolidation. We don't know what can happen. But just as we spoke about earlier with the dollar yen, if we break and close above these highs, giving us fresh highs, that would be a continued sign of bullish continuation. Then I would look for a pullback just because that's my personal trading style of choice. I like buying things when they're cheaper versus buying things when they're more expensive. And then look for that move all the way back up to the highs. Excuse me here, we're getting a little crowded with our chart, but all the way back up to the highs. And then because these are all-time highs, I always recommend holding on at least a part of your position to see if we can end up getting a big ride out of this. So the DAX is doing exactly what we thought. Phase 1 is complete. Let's see if we can hop on phase 2. Bitcoin, Bitcoin, Bitcoin. Bitcoin has been in the news lately because we are approaching what is called a power law support line. And I'll be honest with you, I never heard of this in my life, but if people care about it and if the market is driven by human psychology and crowd behavior, then maybe it's something that you should pay attention to. I prefer to pay attention to more of the classic charting pattern. So here's what I see. I see Bitcoin here on the weekly trading at a very significant level. We are right around 60s or a little bit below there. And if we look left, we can see this was a previous level of support that was hit and bounced off of right here in about February. If I look more left, we'll see that this was a pretty decent level of support that was broken and closed above and then bounced off of back in June 2024, that area. And then if we look left even more, we can see that this was a level that Bitcoin found to be resistance in the past. So whether it's a power law support line or whatever they want to call it, this has been an area that Bitcoin has found to be important, and therefore it shall potentially be important in the future. Now, with that being said, you want to take a conservative approach. And as we go down to the daily, we actually have one setting up. Power line support aside, I like to focus on classic charting patterns. And here's what I see as a classic chartician, if that's a word, right? We have a long directional move to the downside, followed by a brief retracement to the upside. We then have, I guess not technically an extension to the downside per the rules that I follow, but a move slightly lower. And then we have a move back up here. So what we could be doing here is putting in a head and shoulders pattern here on Bitcoin, which is a classic pattern formation used for reversals. Now, if you are a slanted trend line trader, you'll want to see a break of this slanted line right there, or a violation, excuse me, of this slanted line right there. I am a horizontal support and resistance trader, so in order to have a validation of this pattern and the reversal of this bearish move, I would need to see a break and close above this 67K level, 6720s if you may, right? So if Bitcoin can do that, that will be the first sign of that, hey, maybe we did bottom out. And I would expect us to climb back up and potentially retest 80K, maybe 82 quarter, maybe up that level. It wouldn't be a sign of a clear reversal back up to the all-time highs or anything like that. But I would play it to the next level of structure. And then if we break that next level of structure, I would then play it to the next level of structure after that. Hey, if you're new to trading, make sure you check out this new trader starter guide. These are 5 books that cover all the important aspects of trading. And if you liked the video, show me some love by hitting that like button. See ya!